The oil market has stabilized shortly, but Brent is still at risk of sliding to $35 per barrel. The ruble is under pressure ahead of the US presidential election and a holiday in Russia. The energy market is very weak at the moment. The supply-demand balance is fragile due to the sluggish fuel consumption amid the ongoing pandemic. This is proved by a continuous downtrend in the Brent quotes. Crude prices are dragged down by a rising oil output in non-OPEC countries and Libya. This means that in the coming months the oil market may see additional supply volumes, which can be at least 1 million barrels per day. The oversupply may heavily hit the crude prices. With the current pressure from the second coronavirus wave, Brent may easily drop to as low as $30 per barrel. In this case, the OPEC Plus as well as other major producers will need to extend the production cut. Yesterday, oil gained support from the news that major oil producers were planning to delay the increase in their output volumes. Both benchmarks rose by almost 3% on Monday after Russia's oil minister held talks with domestic oil companies in order to extend oil production restrictions beyond the current January timeline. Nevertheless, crude prices will remain under pressure ahead of the US presidential election. In the morning trade, oil quotes moved slightly lower but then returned to positive territory. Brent oil futures were up by almost 1.5% and settled just above $39 per barrel. WTI futures were following a similar trajectory and were last seen trading at $37.70. Today, the ruble is paring losses, moving away from the level of 80 against the US dollar. Yet, the Russian currency is still weighed by the uncertainty around the US election. At the moment, all eyes are on the outcome of the elections. The victory of Joe Biden may cause a correctional decline in the markets. If Donald Trump wins, then markets may face a rally. High volatility will persist until the results are announced, and with vote counting is likely to be delayed. On Monday, the ruble's reaction to the improved background was hardly noticed. It did not make any attempts to win back early losses, which could be associated with increased sell-offs in federal loan bonds. It's also possible that the ruble will extend losses by the end of today's session. Investors may prefer to close their positions on the ruble and opt for safer assets. Besides, tomorrow is a day off in Russia, which means that traders will avoid opening new trades with the Russian currency. Therefore, the ruble may plunge to the 80 mark and below. Thus, the dollar-ruble pair is very likely to rise above the level of 82. In the morning session, the ruble was supported by a slight rebound in the energy market. Despite the current bullish trend, the rise in oil prices may be short-lived as a lot of negative factors and uncertainty prevail in the global markets. That's all for now. Thank you for watching and have a great trading day. Bye.